Just a quick up today to indicate how the market reacted in the wake of the inflation report. I decided to wait a couple of days to get the overall reaction, and I think in the meantime it's more or less in. I'm not quite convinced it's totally in, but it is Friday afternoon, so we won't know more until Monday. There's no point in waiting that long to make a comment on it. The inflation report did come in a little higher than most people wanted it to or expected it to, but not dramatically so. The market did sell off in the wake of it in response to it. Not exactly a surprise because it did come in higher than quote-unquote expected. But the market made it down to critical levels early on Thursday morning, okay, down to near Dow 30,000 and substantially below again the level in the S&P 500 that by conventional standards would indicate a bear market is in place. In other words, down more than 20%. It went substantially below the down more than 20% level, which is 3,837, 3837 on the S&P, okay? And at that point, panic mode set in. They rammed the market up hard for the rest of the day, okay? Got slightly positive on the NASDAQ in the process, made it essentially to zero on the S&P. In other words, wiped out the entire loss from early in the day. Didn't quite manage to do so in the Dow, but it came close. And the way it worked for today, since some seemingly positive news came out today, this morning as well, it was quickly relativized by objective analysts, but that doesn't affect the Wall Street traders much unless the situation is so bad they can't stand it anymore. Okay, and so the market kept right on going. It blasted right up the rest of the way to make up for the rest of the loss of the market over the previous couple of days in response to the inflation report, and then just stayed there, just stopped there, hung up there for virtually the rest of the day, just going up and down a little bit, basically sideways, just above Dow 31,000 and just above, I mean significantly above, not just 1 or 2 points above, but in the big picture just above 38, 37 on the S&P 500, effectively at about 38.50. Okay, bouncing around a little bit the whole day, but just fighting like crazy to hang on, trying to make sure they could hold those numbers into the end of the week to, as usual, make the end of the week numbers look as good as possible. Okay, the market did start dropping late in the day again. Okay, it looked like it was going to be a very weak market at the end of the Friday instead of an end of Friday bounce. But when it started going down significantly, they apparently panicked again. An end of Friday bounce kicked in after all yet at the very end of the day. And literally in the final minute or so, they rammed it way up yet, right back up through the entire small trading range I was just talking about, and actually managed to ram it up higher than that yet before the end of the day, to end up once again at the end of a Friday closing at or near top tick for the day. Hoorah, 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 the traders would say. We made it. We pulled it off again going into the weekend. We got exactly what we wanted. The problem is, can they sustain it? I doubt it. Okay. Anyway, bottom line is European markets also exploded back up again. They're not all the way, but they went up a lot too. German market also closed at top tick today in the end, although of course hours earlier than the Dow closed because they trade earlier in the day, but during their trading day they closed at the top tick of the day too and went way up in the process over the course of the Friday as well. Okay, so, you know, basically they made up for the entire drop. Okay, I'm not exactly surprised about that. I did warn that Friday was coming up, and Friday is always a unusual special day. They will do whatever they can to make the markets look as good as possible, and they usually pull it off. Okay, historically speaking, they did today too. Okay, and I also knew that once the market got down to those critical levels again, like Dow 30,000 and like the level in the, because it had gone down there before. The S&P initially went down there before several days ago. The headlines on the financial webpage, trumpeted, the S&P 500 is now officially in a bear market by conventional standards. They didn't say that, but that's what they meant. It went back up above that again in the days afterward, before the inflation report came out. But once the inflation report came out, the reaction of the market was to go back down there again, and substantially below that level again too, at which point the Dow was just above 30,000, and the Nasdaq was also at a critical level overall. So at that point the traders panicked, as they often do when such situation gets encountered, and rammed it right back up again over the course of the rest of Thursday and Friday. Okay, not exactly a surprise at all. Okay, so we're right back there wondering how much longer this can go on yet before they finally give up the ghost, in other words, before the situation finally truly gets bad enough that the traders can't stand it anymore and the next true leg down starts. But that is still a ways off, apparently. Won't happen before probably past early next week at the earliest. I might add, interest rates are also still staying up there. They're often above 3%, and when not, they're close to 3% in the process. I will also add that the euro has now briefly gone below 1 to the dollar. It's back above it in the meantime a little bit, but it has gone below 1 to the dollar. It is way down. What that does is make, the dollar's been going up against pretty much all the currencies. I'm just using the euro as a reference point here. And what that does is make the imports to Europe more expensive, driving their inflation, but it makes imports to America less expensive, okay, because the dollar is getting stronger. Okay, it makes exports more expensive, but imports less expensive, okay. And so one of the ways the Wall Street traders are celebrating is, hooray, now that the dollar is stronger, that means the imports will no longer be contributing to the inflation, so the inflation will come down, of course, right? Hooray, let's celebrate. Inflation is coming down. According to the most recent official reading of inflation, inflation is higher than ever. But it's also true that the data that reading was based on is 2 to 3 weeks old, and gasoline prices have also come down some in the meantime since then. So the next reading might be a little lower. And now that the dollar's also going up more, they're saying, oh hooray, that means imports also won't contribute to it, so that'll help drive inflation down. Let's celebrate. We'll see how long that can last before the rest of the problems going on out there get in the way again. At least in a truly real way that Wall Street traders will notice. That is bound to happen sooner or later. If nothing else than the national debt continuing to get in the way. It won't be really long anymore before the national debt will hit $31 trillion. It's almost at 30,600 billion now, and it crossed 30 trillion only a few months ago. It will hit 32 trillion not long after that, and we'll see how many times it has to go through another trillion in a matter of months before the Wall Street traders catch on to the fact that it is going up faster and 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 faster, and will soon be going up fast enough that neither they nor anyone else can ignore it anymore. It's such a big exponential, the numbers are so big that I don't think it has to go all the way exponential before they will notice, because the numbers will start going up so rapidly because it's such a huge exponential that they will notice the fact of the speed of it before we even get there. That's not too far down the road, but we'll have to see how long it takes, and we'll also have to see what other stuff will get in the way in the meantime to wake the Wall Street traders up to what's really going on in the real world, wake them up to even sooner than that to those things, to get them to be less optimistic and enthusiastic in the process under those circumstances as well. Okay, and I still think in the end the national debt exponential will just contribute to that environment rather than being the actual primary cause of it. But we'll see about that.